John Monson with Rural Ruckus Podcast here with Bill Moore, our Chief Risk Officer from Compeer Financial, here at the Lakeville office today. And today we are going to talk about the rural economy. We're going to discuss some of the micro issues that are affecting rural communities, and we're going to dive into it here. Get started, but Bill, start off with a little bit more about you.
Yeah, thanks, John. I was your peer and colleague for a good 10 years.
Right.
I actually am an interesting farm credit nut. I actually was born on the East Coast. I grew up in Boston. I worked in New York for 17 years before moving to Minnesota to follow a hedge fund career. Right. That's my specialty was finance. For reasons that would be a whole nother podcast, I didn't stay in that, but we really enjoyed living in Minnesota, and we decided to stay here, and that's how I ended up at Farm Credit, because they were looking for somebody with a little bit more of an outsider's perspective, and I've now learned agriculture in those 12 years.
Yeah, and you have some areas of responsibility that you have. What are some of those areas you oversee?
So I have the risk function of the organization, which manages our portfolio, make sure we're not taking undue risks, understand where the exposures are. And then I also have the credit underwriting department. So all the people who listen to this podcast that get approvals from Compeer that came from my team, you can send me a little thank you note.
Right, exactly. Now, the good news is, I guess, or bad news is I actually interviewed you when you came here, and that was interesting.
That's your biggest mistake in life.
And it's on my resume forever, and there's nothing I can do to get past that. I guess, so I pay the price, but the bottom line is you've served in a great role here, showed a lot of leadership here, especially around economic issues, Bill. And you've dug into a lot of those, especially on the agricultural side. Today we're going to focus as much on the rural side too, because we know that those communities are affected heavily by agriculture, but also other issues as well. We know that interest rates, we know that the price of oil, we know that international trade all impact on all these things. Broadly speaking, what are some of the issues that you see or you watch more broadly that affect rural America?
Yeah, and so I'm a suburban kid who is learning the intricacies of rural communities, and they've extremely impressed me as to how they operate, how they live, their community that they serve. And being part of Farm Credit, our mission statement for all of us, not just Compeer, is to serve agriculture and rural America. Right. And as a Farm Credit system, we do a great job on the agriculture part, and that's where I've kind of built up my expertise. But where we've failed to a degree has been in the serving rural America part. And so it's really finding out how we can use our platform to help the communities that we serve. Now, from an agricultural lens, it's very tied to rural communities. So ag is a global issue that is affected by global events. And I think one of the larger concerns I have as someone who's come into this industry is to look how we have essentially eroded global market share. The United States was the clear leader in supplying food to the world for decades and decades and decades. And only in the last, call it 15 to 20 years, has that begun to be chipped away at, primarily by being financed by China. China has created a market network. They call it BRICS, or we call it BRICS, I guess. It's Brazil, Russia, India, China, and then for some reason South Africa is included in there. I to be honest, I have no idea why. But they've created a trading partnership that has essentially invested a lot of infrastructure in South America, particularly Brazil, to try and create them as the dominant supplier of global grain trade, which has come at the detriment of us. We have moved from the primary source to the marginal supplier to the globe. So when something like Ukraine war happens, that's great for U.S. production because we fill that gap.
Right.
When South America has bad weather, we fill that gap. But you don't want to be the marginal player. You suffer too many highs and lows. You'd like to have much more of a steady state. So how do we build a global trade system for agriculture, our biggest export to the world, where we are the primary player? And that's probably by designing our own network of partners that we can trade in, where we're their first choice, that they want to come here for U.S. pork, U.S. beef, U.S. grains, and we're the first call. But that's a long slog to get there. This current administration, I think, is trying to get there. They're doing it through tariffs, which is a way to do it. I think you'll find as many people say it's a bad way as say it's a good way, but it's a way. Right. It's a way we haven't used since the 1930s. The unfortunate part for ag is we're the tip of the spear. There's only so many things you can retaliate tariff against the United States, and it's going to be food. Now, we're now in a multi-year cycle where we're fighting a trade war, and the government is compensating ag by essentially, I don't say paying them off, that's a bad word, but to compensate them for being that tip of the spear. Hey, you guys are the frontline soldiers, we're going to pay you more.
Right.
The problem with that is we've done some analysis, and in 2025, the average farmer in our territory, Minnesota, Wisconsin, Illinois, lost about $100 an acre from production. The production expenses are the highest they've, I think, ever been. Maybe not for 2026, because 2024 and 5 may have been higher, but they're still very high. It's the government payments of about $120 that are putting people in this area into the black.
Right.
We can't live on that forever. No one wants to live on that forever. I had a 25-person client advisory committee meeting yesterday, and they all unanimously agreed. We don't want to be arms of the government, dole. We'd like to be able to really legitimately make a living, but we have to figure out how to get there, and that's going to be a hard battle.
There's a lot of other big issues that are associated and contributing negatively to rural communities and actually the whole world. But we've talked in the past about this, but national debt. Your perspective on that and its effect on interest rates.
Well, you were in government, or at least quasi-government. There's nothing more permanent than a temporary government program.
Right, exactly.
And we have so many temporary programs that have added up. We have, and we'll release this in 3 or 4 weeks, we'll probably have another trillion. We have somewhere in the neighborhood of $35 to $36 trillion of government debt. It is not supportable. We talk to our clients about fiscal responsibility all day long. That's part of my job, is to help clients understand what is fiscally responsible about their operation. And we do not have one in Washington. We have spenders who just have no limit to the amount of money they're willing to spend. Now, some of that's coming our way. We're equally responsible in taking some of it, but we have to figure it all out, because, interest expense is soon, if not now, is soon to be the largest expenditure for the government outflows. It used to be, Medicare, Medicaid, Social Security, blanking on what those programs are, entitlement programs. Mm-hmm. Used to be entitlement programs. It'll soon be interest. And so the interest rate is something we are monitoring carefully. It's something the government is monitoring carefully. It's something the Fed spends a lot of time. And it's all tied between interest rates, inflation, and national debt. It all becomes this vicious circle that you have to work on.
Yeah, exactly. So how does national debt impact interest rates? And interest rates are higher than they were, certainly not at historic, like in the 1970s, mm-hmm. much higher than they were, just 10 years ago.
Yeah, give or take.
Yeah, give or take. So what's impacting on, so the interest rates just haven't been dropping. So what is it?
There's a couple of factors. One, we probably spent a good 6 to 7 years too long at zero interest rates. Mm-hmm. Great Recession happened, as I mentioned, that brought me to Minnesota. There was a lot of effects of that Great Recession. And to fight that fight, the Fed basically kept interest rates at zero to revive the economy. But nothing as good or lasts longer than a temporary government program. We kept interest rates for a good 6 or 7 years too long. People got addicted to low interest rates. We raised a bunch of debt. We said money's free.
Yep.
That changed when it obviously spiked inflation in 2022. Inflation hit 9%. It's the highest it's ever been since the 1980s, or it's the highest it's been since the 1980s. But the flip side to that is, if the Fed raises interest rates too much, it's going to cost the government too much money. So they are incented to try and keep them low, but inflation is keeping them from taking them down.
Right.
So the Fed funds rate, which is the rate that the Fed watches and sets sort of short-term interest rates, our revolving credit is based off of where the Fed funds rate is a little under 4% today. Mm-hmm. That's up 150 basis points in just a handful of years. We'd love to see rates come lower, because it will help communities, it will help our clients. But the flip side is it can't drive inflation higher. We have global events like what's going on in Iran, and the Strait of Hormuz is affecting oil prices, which affects gas prices. that gas over a long period of term, short-term blips in energy prices creates long-term inflation effects. So the Fed has got this battle of, we want rates to be lower, the president wants rates to be lower, but we have a new Fed chair who says, I'm not letting inflation come back. So it's this struggle. In just 6 months, we've gone from, I expect interest rates to come down, to now interest rates might actually go up in the near term. I don't think we're going to see them come up much higher, but it really is preventing them from coming down.
Yeah, right. So that's a huge macro effect, certainly on these on all of it. But I'm wondering a little bit more about, as we begin to dig a little bit more into the rural communities and we start thinking about what's happening there. We know that, for example, workforce are major issues. We know that housing has some major challenges as well. We see housing actually decreasing in value while interest rates are continuing to rise. Nothing is really moving all that much. Farmers are impacted. For those that want to move into rural areas, they're finding some struggle in terms of financing. What are some of the chief issues that you're watching in the rural communities specifically?
Yeah, there's a couple of things going on there. I'll hit the first one. I'll hit is what you mentioned, rural housing. There's a deficit of appropriate rural housing. We have a $2 billion rural housing mortgage program that fits in that niche between Freddie and Fannie funding and farm credit funding. It allows them to really fund it at reasonable mortgage rates. And 2 or 3 years ago, when rates started to move up, I was certain that business was going to slow down.
Right.
A testament to the shortfall is that despite rates going up, that business has actually grown even higher now, despite rates going higher. So that says that there's clearly a need there. But the real big one is capital investment.
Right.
There's a shortfall. We have moved from a manufacturing society 30, 40, 50 years ago to a finance society today. We run on capital. It's the lube that keeps the economy moving. And there's a huge shortfall in the rural area. There's not a need for $50,000 microloans. There's not a need for a $20 million investment. There's a need for that middle ground because there's not a efficiency, a being able to leverage scale and size on $750, $1 million loans. There's not a lack of providers. You've seen it. We built a program starting about 10 years ago called Rural Business Investment Program. It's with help of the USDA, but it's essentially a private-public partnership where private money gets invested in rural and agriculture investments, and Farm Credit gets to participate in that, which is something we couldn't do previously. We've put billions of dollars into that investment, but the gap is so much wider. And part of the reason is if you're trying to create a business out there in Cannon Falls, and maybe you need $1 million. Well, finding $1 million for a business loan is hard. To get the guy who has $100 million to help you, I need 50 of you because I need to show them size and scale. And it's not altruism. They're not looking to hand out money. They want a return. And there are opportunities abound out there. If we could grow not only healthcare, daycare, rural Main Street, if we can build communities that actually customers go to and generate profits, that's an investable business. And if we can gather enough of them together, we can find big money sources to help them. So one of our roles is we're trying to build a rural capital network at Compeer. It's one of our pillars, our imperatives. Right. And I think you've talked about it on your cast before. There's probably $100 billion opportunity out there. Yeah. We don't have a check for $100 billion. Even the near-term needs are $12 billion. We don't even have a $12 billion check. So we have to be able to pull in a group of people, public, private, semi-private, who can focus on, hey, I have customers and needs in these communities. My value is driven by helping these communities. Maybe I'm doing some of it altruistically now, but how can I invest money in it and get a return? And it's people like Farm Credit, Land O'Lakes, CHS, General Mills, Tyson Foods. All those are highly dependent on having not only good agriculture, but good rural communities to feed that agriculture, no pun intended. And the Rural Capital Network will hopefully pull that community together.
Right. So one of the avenues to get there, we've talked about it in previous podcasts, and that's the Farm Bill. Mm-hmm. That's a real big policy driver for rural communities, for agriculture as well. Some of the components in this Farm Bill focus heavily on rural and bringing more new capital, or to rural communities, I should say. How closely is Compeer watching that? How important is it from your point of view?
Very closely. The Farm Bill is really important. It's been important for a long time now because of the safety net aspect.
Yeah.
Obviously, as a quick side note, one of the problems is the ag committees aren't filled by seats from rural communities anymore. Right. They're urban people. Yep. We need to educate them on why it's so important. But the bill itself it should be longer than 5 years. It'd be greater if it was. But frankly, we just got to get that in place. But there's components of that, of this particular Farm Bill, that are really important to us as Farm Credit. We have a relatively narrow scope to accomplish that mission of serving agriculture and rural America. It's almost like it's in smaller font.
Right.
We need to increase that font, and part of the Farm Bill will allow our eligibility to expand beyond just the farm. Right. Now, we've done it in what we call mission critical areas, hospitals, healthcare, nursing homes, senior living facilities, all very much needed. But today we have to do that on a one-off basis. We got a project in Wilmer. We need to go to our regulator and say, can we do this deal? That takes 9, 12, and you know better than I, that's probably a year-long process. If we can get eligibility put in place, we can start working on those as a program. Right. And we can do them in a couple months, not the construction, but the financing. And why is that important? Well, something like 15% of the rural populace works in healthcare. Right. Yet, meanwhile, hospitals are closing. People are moving towards telehealth. We need to find ways to get that capital in place so that those people can continue to have jobs. But it's more than healthcare. And the next stop would be, construction industry. We talk about data centers as being a lifeline to rural communities. Whether they are or not is a very debatable, probably a whole nother podcast. Right. But what I can tell you is it drives construction and construction jobs. And so how do we help the education community to say, hey, don't go to get a 4-year philosophy degree. Go to a trade school and learn a trade, learn plumbing, learn electric, learn all kinds of things that you could make equally as much money for less investment on. Mm-hmm. And how do we build up those programs? How do we help fire and police? Ultimately, my dream, and I don't think this is encapsulated in our eligibility in this Farm Bill. How do you get that all the way to Main Street?
Right.
Because having a good local community is essential for the agriculture clients we are serving.
Yeah. One of the things we talked about before I left and retired a year and a half ago was we really want to begin to see more of a vision for the Farm Bill in the future. So this one has been written. We know what it says. The Senate needs to pass it. We're absolutely certain of that. And they need to do that soon. It's been delayed. But the following Farm Bill, that work already needs to begin.
I agree.
About the vision for how do we serve broader rural America and bring more capital across the board, not just for rural healthcare, not just for rural infrastructure, but across the board for rural communities. There are different ways that it can happen, but for true private partnership to be brought in, to work together with the public sector and nonprofit sector in order to make it happen. That's the key. And that process already needs to begin to envision it. I think that one thing about what we've seen in Congress is that they react to what's happened recently, and then they respond to pendulum swings, and they go too far this way, too far that way. We need some vision and some leadership actually to help. And I think that that's where Compeer steps in, and that's what it wants to provide in the future is some vision.
Public-private partnership. The private piece is super important to that mix. Because if you look over time, the government loves to try and solve big problems. And they do it with money, and they don't usually fail. You look at the Department of Education. Education has not improved since we created the Department of Education. You look at the fight on poverty. I just listened to a podcast on the way here from 2 years ago, NPR, talking about how the war on poverty, which started in the 1960s, has primarily been a failure and has only increased in its how much we're contributing to it. I mean, I hate to say it, but it's capitalism and the private sector that need to be incented to be involved because they're the ones that create value.
Right.
You don't create value with the government. You create support from the government in order to execute and impact communities. I love what Land O'Lakes does for rural communities. Beth Ford has been wonderful there. But that's one institution. How do you get 50 Land O'Lakes to have an impact?
Right on. Privately led, publicly supported.
Correct.
That's what we need.
Yeah.
More of as much of that. And unfortunately, there's a view of just the reverse. And oftentimes it just doesn't work. And all kinds of reasons for that. Many will disagree. Don't care. This is a podcast called Rural Ruckus Podcast. And we're okay with shaking it up a little bit.
Yep.
Oh yeah, I'm always ready for a ruckus. But anyways, Bill, thanks for coming on. I appreciate this today. And we'd love to have more conversations down the road at Compeer with all the things that are happening. And we will, as we see a farm bill pass, then the wheels get in motion for building out that model on how to serve rural communities. So we'll get into that in the future podcast.
Pass the farm bill.
Pass the farm bill, yeah. That's what we need the Senate to be able to do. But thank you so much, Bill. And we'll catch you next time on Rural Ruckus Podcast. Take care of yourselves.